All right, family. What's going on? What's going on? Let me know down in the chat if you were here live with me. If you're here live with me, coming in clear, coming in hot. So thank y'all so much for being here, per usual. As always, vibing out a little bit. We're going to talk today about. If you see, I've got my money green hat on today, so I decided to switch it up a little bit. We've been a little bit bearish, and Brian, are there any like good things happening? Are there any like good things that I should be looking out for? Because it seems like I've been on defense mode for a little bit. So we're going to chat about that for a little bit today and answer any questions that anyone has live here. And if you're rewatching, I appreciate you so much for tuning in. You're more than welcome to skip ahead a little bit, but it always helps the algorithm for you to watch the entirety. I've always thrown some little gems in there, teaching while also educating for the week that we are currently in. So we're rounding out the month of March, and by rounding out a new month and a quarter as well, it creates new opportunities, especially for those that have been lagging behind. It seems like, as always, folks say they're about it. They're about it. They're trying to get their stuff together. They're ready to start. They're ready to do X, Y, and Z. And if you've read the Atomic Habits, Power of Habit, or if you are a habitual learner or studier, or you are just a researcher in general, you understand that habits take time to actually become an actual routine. And a lot of folks, they dismiss habits continuously. So you have now encountered 90 days of the stock market into a new year. And for some, it's been a little bit turbulent. Others, they have like bared through it, all puns intended. And some people are just kind of sitting on the sidelines. I don't know what is going on, whatever, right? But it seems like that time span of 90 days has just poof, it's gone, right? So if you have been quote unquote struggling or still trying to understand the stock market stuff, or you've been successful, either way, congratulate yourself. You have made it through a quarter of a new presidency, and we'll see how the remainder of the year goes. We cool? We cool? We cool? So put a 1 down in the chat. Let me know who's tuning in with me today. I'd really appreciate it. And we'll get right to it. I'll always give like a little bit of a buffer time. I can see as people trickle in here. So that'd be great if you can help me out there. That'd be wonderful. All righty. Yeah, can we talk about Palantir? Yep. Kind of broke above 90 last week. So people might be wondering on Palantir, is it ready to go to 100 again really quickly and then come back down with the market? Because Palantir is, it has been holding up some key levels. So we'll definitely talk about that today. Anybody else, you're more than welcome to put down in the chat as well some stocks or questions that you may have. My objective today as we get started is there's a lot of folks that I've been chatting with, or just in general been asking through other social media platforms. I've been asking like, hey, Brian, is there anything that I can just hold for a month, 2 months, 3 months? And I'll go ahead and get it out of the way right now. It's very tough to tell because the stock market right now is literally on the brink of either continuing higher or it's going to go lower. So the sentiment stays the same as last week. And that's frustrating for some folks because they just want to, hey, just give me something to buy so I can make money and I don't have to touch it. I don't have to look at it. And I want to do it in a week. That's tough to do when the market is back and forth and back and forth. For those that are in my Leverage University and live trading, or you've been seeing the market intraday, right? You understand that. For those folks that don't understand, they're just here watching a video saying, oh, stocks to buy, I can just put money into it, I'll make money. Yes and no, right? So I just want to get that out of the way right now, that it's a little bit more strategic, right? Because we are in a very volatile market. Volatility brings opportunities, but volatility can also bring lack of attention for some folks, just lackadaisical. I'll throw something in there. Next thing you know, they don't know where it's going. All right. So I just want to throw it out right off the bat that we'll talk about some today, some stocks to buy, some leaps, some swing trades on the bigger side where you may be busy going into the summer months and what can I hold into the summer, things of that nature, especially for those that have children or they're getting busier in their businesses or jobs, things of that nature. All right. It's getting warmer outside. Folks outside, folks didn't capitalize on Q1 are now like, man. All right, we cool? All right, all right, all right. I'll check the chat periodically. Let's jump on into it today, and get ready for the remainder of the week and into the new quarter. All right. All righty. As always, gotta let folks know, if you're already in here in live trading, you're already in our community, just dismiss it. Okay. However, there are a lot of folks that are sitting on the sidelines. And I have to mention every single time that folks think they know what they're doing. And I don't care if you're in multiple communities, right? I don't think any thought leader that's teaching any skill set should should push people away from having different vantage points, different viewpoints, right? It's very important to have different listening ears depending on the type of style that you like. A lot of people like my style because I'm teaching along with giving some plays or trades, right? Versus just giving it and you don't know why you're taking it and you're not learning from it, right? So here's our Leverage University. There's much more in here than just the trading floor. So for those of you that are rewatching or are not in here yet, I highly implore you through this next quarter to jump in for 3 months. Right? Jump in and actually be active and see it play out. Whether you jump in the trading floor and just only focus on the shares and leaps section, there's a lot of folks that do that. They just come in here and say, hey, I just want to focus on shares, leaps. I'm busy. I don't have time to day trade. That's cool. You can look in the swing trades channel, right? And we have our threads here where all the swing trades that I typically try to give ideas for. And then our day trade signals where you need to be a little bit more attentive to those because I plan, if you have watched my day trade versus swing trade video, that is when we are active and trying to get out of the trade within that particular day. All right. So if you're a little bit busy, got other stuff going on, please make sure that you're attentive as much as possible for these day trades. And if you're not in a live trading, you're only taking the day trades there. Um, I implore you to understand what I'm talking about here before, so you know where your entry is and the exit. All right, we cool? So love to have you. Link will be down below, and maybe I'll put it in the chat as well if anyone wants to join while we are here. There should be a little discount code that may pop up for the month of April. Okay, for the month of April and going into Q2. A lot of folks wonder what's up, right? I've been taking a hiatus from content creation for really the last month, if you've been noticing, meaning on my socials. And the reason being is because I think that I needed a break from looking at what folks or what I wanted to share that was powerful for me, in my opinion. So I want to create more lifestyle content. I want to get people to understand me a little bit more. I shared a lot of stuff on my town hall that one day, some podcast interviews I've done, some people I know, the connections I have. And I know a lot of people on here have connections as well, right? So I think just reintroducing myself in some sense, I think people get it twisted about what I've done over time. And that's maybe why I had that calmness about me, even at a maybe quote unquote younger age than some of y'all, but have been through this entrepreneurial journey and this personal development journey for a minute. So I want to create more day in the lives, more open podcasts, maybe get some of you on my podcast as well. My podcast was back in 2018, so go check that out. Some episodes that I've done, and I put it on pause for about a year or so because now, guess what? All the podcasts are video based. So I'm like, man, I was rolling. I was getting views, clients, all kinds of stuff, interviewing cool people. And now everybody wants to watch it. So I'm like, all right, let me bring out the professional camera gear and get on camera again. All right. So that'll be coming back out. Um, for anyone that wants mentorship or any type of coaching, business, life, or in this trading space, I typically do quarters, right? So 3 month time spans, 6 month time spans. So there's a whole new quarter. So a lot of folks have been messaging me and kind of interacting and asking questions like, hey, Brian, I need a little bit more support, need a little bit more help. So just want to throw it out there that if you want to have a little bit more guidance, private chats, one-on-one Zoom calls, things of that nature, because I can't cover everything in a YouTube video and I can't cover everything in live trading or any other platform where I'm just chatting and talking. All right. So with all that being said, got to get that out of the way. Let's jump into it today. First thing on the docket, as usual, we talk about our economic calendar here. So our economic calendar gives us the reports that are happening for the week, and we are ending off a month, okay, which has been an interesting month to say the least. All right. Monday, we've got PMI. Anything, as a reminder, anything around 10 a.m. is going to be very, very important. So a little bit of volatility is going to happen around PMI at 10 or 9:45, just rounded up to 10 a.m. Eastern Standard Time. So be careful on that. If we're in live trading, we'll take some trades around that, maybe after, or if we see it, maybe get some starters. Y'all know what we do in there. So Tuesday, consumer confidence, another 10 a.m. report, new home sales, another 10 a.m. report, going to be very important there. March 26, some 830 data, durable goods usually create some volatility. And then at the end of the week is going to be very, very important. Pretty heavy week as far as the end of the month goes. We got GDP and we've got PCE. Okay. Both of those, personal consumption expenditure and our gross domestic product, very, very important data reports. And as you remember, for those that don't, CPI and PPI were all 830 data reports. Those brought a lot of volatility and pretty good money-making opportunities on those days. So anytime we get 830 data, I'm looking to make some money on those days. Thursday, Friday, going to probably be the really good days of trade. Typically Wednesday and Thursday are my best trading days personally. And then Tuesday, I kind of get my feet wet after Monday. So if you want to, watch the market tomorrow, or we see if there's any opportunities and we wait till Tuesday, Wednesday, get a direction for the market, we can, have our trading days on really Wednesday and Thursday and then take some risk off on Friday. All right. And just see how the month finishes out. Interesting enough, the month actually finishes out on a Monday of next week. So that's actually very, very interesting of how that's going to be. All right. Let me check, make sure everything's coming in clear. All right, we're good. What's going on, Neil? Neil, you asked a question last week, and I forgot to answer it. You were talking about the fear and greed index oversold. You just buy shares when in fear, and then, typically maybe take some profits when things are in extreme greed. So I did not forget that, and I want to cover it today. All right. So there's that. Any news right now in the markets as far as fundamentals? Nothing really that until the week kind of spans out. Tariffs supposed to go in effect April 2nd. So maybe if we push any higher, which the bulls are kind of showing a little bit of strength, but again, same sentiment. We could just be pushing higher. So for those who've been watching my stock market Sundays, please be mindful that the same sentiment that I was talking about the past 2 Sundays around, please be careful as it's grinding up, that you don't just assume that this is the bottom. Okay. We got a couple more things to break. Maybe it'll happen this week and then we can confirm which way we're going. I thought Friday was going to maybe give us that confirmation, but we're pretty much sitting in the same spot. So a big move is going to happen one way or the other. So if you're taking notes, anytime you have consolidation, a big move is coming. Okay. So if you're a note taker, anytime you have consolidation means in a range back and forth for a period of time, typically a week, couple of weeks, a big move is coming. Okay. So it could be the downside. It could be a spurt and breakout to the upside. We don't know. Okay. Which is why you saw intra week last week where it's like, man, I got to take this call out. Do I have to trade calls? Okay, maybe puts, and then it doesn't continue. It's going back down and then calls back up and then puts back down. You can't hold any type of options trade if you're noticing that. Okay. It's like, I've got to get my profits where I can, or just stay away for right now and just chill until we get one direction. It is okay not to trade every day. That is what I typically do. But because I teach this, and I'm in the markets, I want people to learn, and I'm kind of quote unquote sacrificing my normal routine for the ability of people to learn. You only need 2 to 3 trading days, if that, a week, right? Which is why some of y'all see me tap out and like, yeah, I'm done for the day. And some of you are still like looking for trades. Like you stay in the markets all day and you're looking for trades. I'm like, I'm going to the pool. I've got other client stuff going on. I've got other business ventures. I'm going elsewhere, right? So that discipline takes time to know that there's always another trading day. So it is okay that you don't make money every single day. We cool? All right. Let's jump on the charts. I'm tired of this, all this fundamental data and news. It's all skewed and manipulated anyways. So let's jump into the charts and let's go over SPY. Okay. So this week, our trading range is going to be roughly from 560 to 573, 574. Okay. On SPY. That is our trading range. Okay. It is a very large trading range. And we've got to be careful where we enter, where we exit if we do take a trade on the SPY. Okay. So this is what I was talking about with that trading range. So for those of you that are fairly new, when you're asking me, hey, Brian, is there something that I can just do that, I've been asked this multiple times. So I'm not, singling out any individual person. Like, is there anything that I can just hold for, a month or 2 months or just hold for the week and take it out the end of the week? With this heavy of a data week, not necessarily. Does that make sense? I just showed you all the data that happens. So if you enter a call, it's like, I'm just going to enter a call because Brian said it's going to go up to 574. Cool. But then data could come in and knock it straight back down. Right. So there's nothing right now, in my opinion, that really holding a big swing trade. I'll throw some out here because that was the title of this video. What can I buy? So we'll go over that after the SPY and the overall market. Okay. So this is the trading range I was talking about. Big range from 550 all the way down here, and then roughly 574. Okay. How I got that trading range is from this last breakdown, gap down that we had right here. Okay. So we topped out around 574, 575, give or take. The bottom end of the range was right at 570. Okay. So what happens is we broke underneath that level and we're trying to come back up to retest that level. That is what typically happens. And the breakout I'm talking about is if we get back above 575, then we can confirm again that we're headed up. Okay. So that is why if you're just starting or you're trying to, like, you've been in it for a year or a couple of months, or you're just kind of getting into the trading space, it's like, why does everyone say this is easy? And it's seemingly like I can't really get a rhythm, right? That is okay. Give yourself some grace. This is not an easy market to trade in. So if you're seeing myself or others, like, and I've even taken losses, I've shared those, or break even days, right? The best people that are showing profits or wherever they're showing it or whatever, their profits could be $500. It could be $50. It could be $5,000, right? That comes with time because that person, whoever they are analyzing the type of market that they're in. So they might be scalping. They might be in and out of a trade within 10, 15 minutes, but you're trying to hold a trade all day. So it's like, man, how did they make that money? It's like they knew the type of market. So it's a very short entry, short exit. I'm out. I took my 30%. I don't know why you're holding. So kind of get that in your mind for my newer individuals, that it is okay to feel like, man, when is my breakthrough going to come? Right? When is my breakthrough going to come? And sometimes the breakthrough comes by just watching, just like making yourself some rules and saying, hey, I'm not going to take a trade until after 15 minutes of the market opens. I'm going to distract myself in the morning and then come back and take a trade like midday because I feel more comfortable on the read on the market. Maybe I'll watch it with a group, but I'm not taking what everyone else takes. Maybe I only trade from Tuesday to Wednesday because I just don't like the way Fridays trade. I don't know the movement on Mondays, right? Maybe too heavy of what is it? My mind's going blank. Too heavy of a data week. So there's too much data in the way that I'm busy during 10 a.m. Eastern. I'm busy during 8:30 in the morning or market open. So maybe I need to like chill on the days that there's data at 10 a.m. Right? Until I come in, get myself footed. Maybe I ask some questions. If I'm in a live trading group, hey, are there any opportunities today? If not, if it's too risky, cool. I'll see y'all tomorrow. It only takes 1 to 2 trading days to make your week. Some of you, and even for myself, you may have goals and objectives. Hey, I want to make $500 for the week. That's $100 a day. Okay, well, that could be 2 trades. That could be one trade. That could be three. So you could knock it out in maybe 2 days, 3 days. Some people are like, hey, I need to make $1,000 in 6 or 7 days. Okay, well, depending on how much money you're working with, it depends on what type of risk you're trying to take. If you're trying to put 2 or 3,000 in to make 1,000, okay, that's possible. But you have to tell yourself, and if you are underneath a mentor or you're in a group, hey, here's how much I'm trying to risk. Because if you tell someone, hey, I've got $300, I need to turn it into 1,000, but you have no skill set within the markets, that can be a little bit tough because I'm willing to risk $300 or $400 to make 1,000. But if someone else tells me, hey, I only have 300, well, you can lose your whole account. And I'm okay. I just took a $300 loss and I wake up the next day, make the money back plus some. Hey, I made my $1,000. Man, this doesn't work. No, your risk, right, was the same as mine, but that's your full account. Does that make sense for everybody? Can I get a 1 in the chat? Does that make sense? So if you're new, and I'm speaking that specifically to my new individuals that are still trying to get this, is understanding that you are the boss of your markets. You are the boss of the markets and the charts. So you have to assess how much you're going to risk. Hey, you're comfortable holding it overnight. Hey, you're comfortable with your 15, 20, 30%. I'm out. You have to make those decisions eventually for you. Hey, Brian, do I keep holding? I mean, it's up 50%. I don't know. Like, you can. I can give you an objective of where it's headed, but if it goes the opposite way, should have took a profit, you know? So that just comes with time about where you're comfortable taking profit and where it's going and what's going to happen. We cool? Just want to throw that out there. Good night, everyone. Hey, everyone. Hope you're having a great lead. Let's go. Perfect, perfect, perfect. All right. Let's keep rolling. SPY. There's a level. So what I'm looking at this week is to wait for the ranges to show themselves. Ideally, I want to watch for the higher end of the range because we have still not broken out. Okay. We have still not broken out. I want you to look on a daily time frame. Look at where these moving averages are. We're still below the 200-day moving average, which is right here, which looks almost identical to 2022. Okay. Very similar to here. Like this and like this. Okay. I want you to look at what happened when it started breaking underneath the 200-day right there. Okay. And let's go to a daily chart. Okay. I'm going to get this off of here so you can see it again. And for those of you that have seen this before, I understand, but there's new people that come in all the time. So if you're familiar with YouTube or you're not, you're like, dang, like it keeps repeating the same thing. Yes. Some people need to hear it multiple times. Okay. Here's 2021. We grind up, grind up, grind up, grind up, break out of this channel. Okay. I'm on a daily time frame. We break underneath that orange line. Okay. And then we hold underneath it. Okay. I want you to look at what's happening here. There's 2023, October. Same type of idea. Okay. Channels up, breaks underneath that 200-day, and we're trying to retest higher. So if you still are not, thinking that, hey, we can go lower, this should tell you a telltale sign. It might not be a crash like that. It could very similarly be like 2022, where we just trend lower and you just keep buying the dip. There's a dip. Oh man, we're back up. There's a dip. Oh man, we're back up. Oh, keep buying the dip. Up. There's the bottom. So there's our bear market. And that is 27% down from the highs. All 2022. So every pop is getting shorted. Every pop is getting shorted. So that is how to identify why this is important to understand that when people are saying, or I'm saying, or anyone that you hear, or maybe even yourself, man, we're not in a bear market. We're not in a bear market. This is just a correction. We don't know just yet. We don't know just yet. It may take another month, or it may take through the summer. It may take into the fall time to really identify that, oh, well, okay, are we back to all-time highs, or is just a higher low and bigger rejection? Cool. So, like I said last week, you can keep buying the dip if you'd like, but please prepare for more. All right. So, line in the sand, 570, and then the higher end, 574 roughly on SPY. My idea this week is to let it push up. I'll give you my idea, which I don't want to have too much of a bias on SPY, but look at this. If I see another type of higher rejection up here, I may start looking at this as a potential head and shoulders. Okay. May start looking at it. So I need a break above this previous high right there. So we had our group members inside of Leverage University on live trading on Friday that said something very interesting, which was, I just don't feel comfortable with calls just yet on the main market, like SPY, QQQ, and then some of our tech stocks. Even though they pushed higher on Friday, does that mean that we're going higher? Maybe. Or does it just setting up for a bigger rejection? So I get that. If you feel a little bit kind of off, like, man, I wanted to hold calls here, and then it got slammed back down overnight. Hold calls up here, then I wake up in the morning, it's back down even lower. So yes, that is a real thing. I hold calls here, I wake up in the morning, it's back down. The whole move's gone. So I get that. That is okay to feel that way, to have a little bit of a bias of what type of sentiment the market is giving you. So you wait for that opportunity that you want. So if the day is only presenting call opportunities and you still don't feel comfortable with calls, it is okay to sit it out. That's what I did on Friday. I was like, no, I'm done. I'm done. Right. However, if you're a person that is okay with trading, you know, opposite directions back and forth each day, that is okay. Right. But sometimes it's better, in my opinion, to wait for your type of setup that you're comfortable with. And the type of setup I'm comfortable with right now, right, are rejections, because the market is presenting big, massive rejections each day that we push higher. So if I have to wait and miss the calls all the way up here to 574, and that's my higher end of the range, we fill this gap, everyone's catching calls all the way up here, I'm like, cool, I'll wait, because I need confirmation a little bit more for my trading style, right? So I'll always in our community give a call bias. If we break above 570, 571, cool, you can take calls confidently up about $2 or $3 more on SPY. You have to decide that that is your trade that you like. Cool, Brian said it's going up here. All right, if it breaks above there, that's more confident. There's a gap fill, I can take it up. Well, Brian, why aren't you taking it? Because I'm waiting for a push up here and then see if there's weakness, and then I want the big move back down. Right? So we're both winning. That's fine. Cool. Good. Let's keep moving along. QQQ. Same thing, but in my opinion, is showing a little bit better here with this bigger bear flag that's still in play. Okay. So the line in the sand for QQQ, which I think it's a lot clearer, like I said, is above 486. If you see QQQ above 486, that's going to give the bulls a little bit of momentum. Okay. So all you have to do is check above 486. Cool. There's a little bit of room to take calls up into 490, potentially 495, and maybe we get some kind of squeeze. Maybe data's good and it's back up to 500. Okay. Do you see how that would be a breakout of this consolidation trend, and it breaks out above? Okay. So above 486, if you're taking notes on QQQ, can give a little bit of a squeeze back up into 490. Okay. So that is your line in the sand for QQQ. If we keep rejecting underneath 486, okay, I'm not really interested in taking calls back up, because I want it to push up into 485, ideally, get into this range and see if it holds up here and it fails to go lower. Maybe it consolidates up here, starts building like that. I'm not gonna lie, that's tough to trade because every single time, look at what it did when people thought it was gonna break out. The next day went all the way back down to 473. Next day went all the way back down to 473. So, how does that give buyers much confidence to keep buying every time it pushes up here? So, they're going to wait until it breaks all the way through. Okay. So, I'm more so speaking to my traders that trade intraday and week and things of that nature. But if you're a long term investor, you want to see that the market breaks above 486, 487, because in the short term, that might give us our bullish push back up into the 500s. Cool. So that's short term. Remember what I was saying earlier is that, oh yeah, Brian said like the higher we push, I still need to keep my head on a swivel, because if we push higher, right, we think we're in bullish momentum, right? But there's still that daily 200 moving average that's sitting right there at 493. Remember that from last week? So on QQQ, really need above 494 for that real big bullish move into 500. So you see the tightness of the range. It's like, man, I got to worry about 480, then 486, and then 490 and 494. Yeah, that's the market we're in right now until we break out either way. All right. Okay, let's keep going. Check the chat. Any questions, thoughts? Make sure you put your questions, thoughts, perspectives down in the chat for me. That'd be great. So I can take some interludes and answer some questions. All right, IWM. Still channel bound. Still channel bound. High end of the range, 208 roughly, 207.50 below 208. And then bottom end of the range, I would say 200 for right now. So it's in this really tight range looking like that. Okay, it broke underneath a little bit. So again, every time it pushes up, gets knocked back down. Every time it pushes up, gets knocked back down. Some of you may be looking like, Brian, are you seeing any like inverse head and shoulders here? Something like that. I'm like, yeah, but sometimes I can't trust it yet. So I may wait for it to break a new high for me to trust the breakout. So as you've been learning, or some people have been taking our boot camps, just know that these structures that you're seeing, these inverse head and shoulders, which is a bullish move right back up, right, which typically goes something like this, right? I may just wait until that big breakout and then wait for the pullback, right? So look left. We're right here right now. You see that big rejection right there. And there's some more rejections that are coming in right there and right there. So I'd say IWM really needs to get back above that 210 level for it to really kind of break out. Otherwise, wait for it to pull back, buy more, just trade in this range. It's ugly to me, a little bit ugly, but big buyers here, and it has room back above 210 into this 217. All right, let's go into Palantir since Shalita asked about Palantir. Okay. So she was asking maybe if I'm reading her mind, like, okay, Brian, I've been watching Palantir for a while and we've been trying to get this to go down to pull back to come back to 80, and it's just not. And is this now an inverse head and shoulders to go higher to back to 100? Yeah, it depends on how the week holds up. Depends on how the data comes in, how Palantir reacts, because there's still some overhead resistance that's stepping in right around this kind of moving average here at 93. So that's kind of the next level there. Okay. So if Palantir pushes up, it could be a little inverse head and shoulders right there for it to go up to this 93 level and see if it starts basing above 90. Okay. So Shalita, if you're looking for, and then this goes for everybody. If we're looking for Palantir to kind of break out of here like that, I need to see it push up into that level, ideally, because it's already broken out. I mean, look at this. It's already gone from roughly consolidating 82, then reclaiming 85. It's already moved from 74 to 90. So to trade calls or to, and I'm going to address shares as well. I think shares lower personally. You can buy Palantir at $90, but I like it back in the 50s and the 40s if you are, really trying to load up on Palantir still, in my opinion. Long term, Palantir, I think it's great. It's just about where the best entry is for shares. And it could be underneath 100, but I think a better entry would be lower into the 50s, in my opinion. So 90s can pick up a little bit. It's 125, came back to about 70. It's holding up this previous high at 85. And we'll see what it's doing here because this may be a little bullish sign right there. Okay. So break above 93, Shalita. We can maybe look for that 100 push. And then we'll see what it does roughly around 100. And maybe this is a retest of pushing all the way back up into here. It could be. I think the market's just on a teeter-totter. I don't want to overthink it, but I also don't want to get slammed back down just because it's pushing up. But that is a good candle off of that daily. So we'll see what it does roughly around this 93 level. I'd put a line at 90 because it did close above 90. So I'd put like it's a caution line right there to see if it holds above that 90. And then draw a trend line here because, yeah, we still do have this big gap back to 80. Not big, but a little small gap that needs to get filled at some point. So could this be a push up into there and then back? Maybe. Could it be a push up into 100 and then right back down? Maybe. So Palantir has been very interesting in here. Does that help, Shalita? Yeah, all options are still pricey right now. I think because of the volatility. I was saying that last week, Ben, just because SPY normally for a 1 day expiration, like I think that's why some of our community members have been trading like 0 day expirations because normally SPY contracts aren't $300 for a 1 day expiration. That's why personally I haven't really been trading SPY that much or QQQ that much because I can't even put the time on it that I want to because spending $300 or $400 in the money when I can trade Apple in the money for 200 or 150 or Amazon for 150, 200 or Google, and get the same type of move, it just really hasn't been worth it. So those option contracts have been pricey on SPY and QQQ, and that's just because of the volatility. But yeah, I mean, QQQ on a 2 day expiration, $500 either way, to go one strike out. Like, you know, so yeah, just something to notice. So I appreciate you bringing that up, Ben. Cool. Anybody else keep throwing questions in the chat if you want me to cover anything else more specific? All right, let's go to what the whole green hat and bullish signs. Like, what can I buy now? Like, stop talking about all this bearish stuff. I'm about tired of hearing it. What is on sale? Okay. And just because these things are on sale does not mean they can't go lower. It's just they are at a low point whilst the market has pulled back tremendously. Okay. So a couple of things, and with these companies, you do have to do some financials as well. So if you're looking to learn how to do that, join our boot camp for April. I'll be coming up in the next couple of weeks where I talk about how to look at financials of companies and how to assess whether it's a good buy or not. Okay. So One right now that some of my fellas and ladies might be interested in for a potential push off this level. And do I think this is a buy area necessarily for like shares and stuff? Yeah, maybe, but it's holding up at a nice support, which is DraftKings. Okay, we know March Madness is going on. Sports betting has gotten huge. Obviously, I'm here in Vegas, so the sports books right now on the strips and everywhere is just absolutely packed. Folks flying in for March Madness. So the next report that they have, the next earnings report, is coming out probably in the summertime. I'm not sure exactly when it is, but their Q1 report will be coming out. And I'm wondering if they might have a little bit of bullishness. Let's look back at the last 2024 report, which was in May of last year, and it was decently bullish right here, right? It was moving up into earnings. Okay. So it went from roughly 39 back to about 45. Not a huge move, but just something to put on your watch list for DraftKings as it has pulled back into this buy zone of around 36. There's 36, there's 36, went back to 74, there's roughly 40, went back to 65, and then it's kind of consolidating here that back to 36 could go back to 50. So just something to watch. Not a big discount there, but it is kind of in a buy zone. Okay. Let's go to Lyft. It's another one that I wanted to put on watch. And I've been watching this for a while because Uber broke out. All right. Uber has been just doing very well. It broke out from $20 back in 2022, went all the way back to 80, or not back to 80, but went to 80. And then it's been just consolidating between 60 and roughly 85. Okay. So why is Uber's little brother, little sister, youngin, whatever, been taking a nosedive? Because they have not been profitable. And that's what, you have to pay attention to when you're looking to buy shares long term or you're looking for some type of, bullish reversal. Now, for those that remember in our community, this is when we invested into Palantir. Okay. Palantir was taking a nosedive back at 5 and 13, 14. They became profitable in this bullish run between 12, 13, 14, $15. And that's when they took off. So these companies that essentially you're looking at, man, when are they going to move? When are they going to move? And you just keep seeing, it's like, man, is this a dump? I don't know. You have to start looking to their fundamentals and their financials to see if and when they're going to be profitable and if they do have free cash flow on hand. So if we go to Lyft on, let's just say Yahoo Finance. All right, you move it kind of slow now. Mhm. All right, let me make sure we're still good here. Yep, if you have the cash. Yep. All right, let's see Google Finance. Let me go into, I usually use Yahoo, but let's see if they have it on here. Cash, short term, cash flow, quarterly. I need comparisons. Okay, total assets to total liabilities, quarterly and annually. Okay, so their assets are higher than the liabilities in 2024 and also in 2023, 2020. Let me see income state revenue, net income, net income negative, net income negative, net income negative, and then 2024, you can see right there that little yellow piece is now above that zero. So in 2024, Lyft just became profitable. Okay. If you look at this comparison, everyone see that? So that is what I'm looking for when I'm looking for a company to really start taking off. And it doesn't mean that Lyft is going to, go crazy like Palantir necessarily. Just take out the noise for a second and they could just double from here. Okay. So this type of chart is a consolidation waiting for them essentially to become profitable. So 2023, 2023, and then look at 2024's bullish moves. How much they have gone 12 to 20, 9 to 20, right? That's doubling your money. So if you had $1,000 just in shares, okay, $1,000 worth in shares, that's doubling your money regardless. Now, what if it goes crazy from, $12, $10 from here and goes to 21? Well, if it breaks above this 20, 21, then that's when you're going to start seeing moves like potentially Uber, things like of that nature, like when they first IPO'd. So you start getting moves back to 35, 40, right? Maybe back into 60, and maybe they fill this gap all the way back up to 76, depending on what their game plan is in the future. But profitability is the first sign of some type of buy signal, okay? Especially leading into this, kind of multiple pops here. So you don't even have to do shares if you don't like to, but I think anything around the $10 to $12 range, right? If someone doesn't want to do options, they could just buy shares and still just sit on it and say, cool, it's not going to be as volatile for me. But if it does go from 12 to 24, doesn't matter. I double my money anyways. Okay. And from the chart that you're getting that 10 to $12 consolidation. So it's moving in like a $2 range in support right here. Okay. Now, what if you want to do options on it? You're like, I don't really want to hold Lyft shares necessarily. I'd probably come all the way about to like 2027, right? Or June 2026. And I'd probably look at, a 20 or a 17, something like that. And you could buy those leaps, okay, and give it 2 years. So when folks are looking for like big, 2-year plays, they can just put in their long-term portfolio, and the option's going to move faster than the shares because each option contract includes 100 shares of said stock. Then this $15 call that expires 2 years from now will probably be into the thousands, most likely. If Lyft starts moving back to 20 and 25, things of that nature, and you're giving it 2 years to play out. Okay. So right now that contract costs roughly around $300. So do you see that you can put maybe 1,000? I'm not giving you financial advice here, obviously, as a disclaimer, but just say someone had $1,500. They could put $1,000 into shares of Lyft, and they could put maybe buy one contract of a call option. And that's how you can have a balance of having both moving at that pace with $1,500, right? Where really it's risk off, in my opinion, because it's already at a low point right here. And we know that each time it hits 12, it's at least moving back to 15, 18, 20. And the more that has been profitable over the past year or so, it has had bigger momentum moves off of that level. Can I get a 3 in the chat? Does that make sense for everybody? All right. And if you draw a structural chart here, it's typically some type of falling wedge, and then even if you want to consider this a falling wedge as well, not as massive, but right there. Every time we have some type of wedge breakout, Look at that bullish candle that comes out of there. Look at how the bullish candles start coming out of there. And then this could start looking the same way. Cool. Well, Brian, do I buy it tomorrow? Do I buy it now? Like, what do I do? I think it's in a buy zone now. I think $12, $13, it's in a buy zone now. So it's not like a wait a couple of weeks to see. It's like, hey, I can start maybe getting a little bit tomorrow if I want to. Right? Please do your own due diligence. I'm just giving you the idea. If you see the idea and play it out, cool. But that is something else. To confirm as well, if I look on a daily chart for the RSI, it is still a little bit oversold here. Okay. Weekly, monthly. All right. So, yeah, I think lift personally could go to 13 and then 15 and then start breaking out going into the summertime. Is that cool? There's one. Yeah, love leaps. All right. Yep. So put that on your watch list. I think that is a low risk, high opportunity, one that everyone can kind of see as an idea. Yeah, and if it goes crazy, awesome. All right, Dollar General, another one that we've been talking about for weeks. Okay, weeks. So if you grab some Dollar General shares, if you maybe snuck into a leap, things of that nature, it is starting to show some signs of buyers stepping in here. Okay, so same idea. Do you see that falling little wedge right there? Look at that breakout candle. Okay, so anytime I have a breakout candle like that, okay, I don't like to chase. That is a signal, right? That is a signal for, okay, cool. It might be ready to make some type of little push. Okay. But you always want to have in mind that I never want to chase something. It's just a sign. So I might be prepared to jump in here for shares and or leaps. So I'll give the same idea for that I gave for lift. The best buy was closer into this 70 range, right? It's moved $13 off. That's not really a big deal in the grand scheme of things. Okay. I think between $70 to $80 is a good buy range for Dollar General to start off shares and or potentially a leap option. Okay. So here we go. It's broken out from 70, went to 83, and it could push up into 90. But as always, that push, people are going to maybe trim a little bit of their profits. So just like here, do you see that? Chase, chase, chase. There's your pullback. That's an entry. So what if this pushes a little bit more, pulls back again into the mid 70s? Okay. So I always like to wait, ideally, if I'm not in yet, or I just want to like, I want a better entry, or I want to get like a more precise entry. I might get some shares and or leaps, either one, options. But I really want that pullback, that first like red day, red candle when people are taking their initial profits back into the mid 70s. There's even a gap down here, right? So if I go into a smaller time frame, do you see that light gray area is even a gap? And we could pull back into the mid 70s, and that would be kind of an entry point right there. Okay. The reason I'm saying that is because when people start, you can get in, right? It's like, man, it's already moving. Let me jump in. And then the moment they jump in, the next day it like goes backwards, and they're like, oh. It's like keep in the back of your mind, like it's people are going to trim profits along the way, especially if you took it from maybe 70 to, right here about 85, 90. Same thing with Merck, right? There's a perfect idea. It went from 80 to 95, and now folks are like, cool, I'm going to trim a little bit, maybe. It pulls back, and then I'm ready to take it up to the next level. Okay, let me give some options to take a look at on Dollar General. And yes, you did see that correctly. There is a massive gap there on Dollar General up to 120 in the short term. So yes, you did see that. Levels on it, probably up to this 99 to 100 in the short term. Very similar to Merck. see how it reacts there. So it's trying to get back up into this level here. Okay. Pull back one more time, then squeeze. So I think it's ready to make some type of move. This is pretty nice of a breakout right here. Changing direction. All right. We go into options. Let's go into leaps. These are a little bit more pricey, obviously, because the stock price is a little bit more. But 2 years out, as you can see, for some of you, I mean, you got it. That's cool. You rather just, oh, I don't want to risk anything out of the money. I'm cool with spending $1,200 for 2 years out. Cool. You may want to look at this 100 call for 2 years out. Right? We just charted it. 2 years to get back to 100 plus, probably going to be happening for Dollar General. Okay. A lot of you asked the question too, like, well, how much is that going to be? You can calculate it, but there's more factors with options that are going to interfere. So to keep it simple, yeah, it's probably going to double in the next 2 years if it goes past 100. So you turn $1,200 into 2, 3, 4 grand, something like that, without having to touch anything with an options contract that expires 2 years from now. Okay, so that gives you a rough estimate. As you dive deeper, as I teach it more, contract selection, maybe join a boot camp. Like what I mean is there's theta decay. There's, well, if it goes to 100, then pulls back to 80, you might be up, and then you might be back down a little bit, and then it goes up, and then it takes off. So you really don't, you can't calculate not how much is going to be by a certain time. I can just give you level to level. So that's all you need to be worried about in options, is stop worrying about, in my opinion, the amount of money that you will make if I enter this at $500, and then how much will I make? Try to focus on the chart of where it's headed. If I'm in a 100 call that expires 2 years from now, do I believe, based on my charting, will it be above 100, maybe back into 193 in the next 2 years? That's all you need to worry about. The money will come with that. If your entry is proper with the stock price, right, and you know that it's headed towards a certain level, and you give the option contract time, that's all you need to worry about. And as you get more diligent, you can start calculating how much that may be. I get a 5 in the chat. Does that help a little bit? And I'm saying that because I used to ask that question too. Like, man, I can turn $1,000 into $5,000, $10,000, but it's about entry and exit. If you focus on those things, where the chart is headed, where the stock price is headed by when, is it in a good buy zone for options? Is it headed back to 100? Probably. But in 2 years, it's already showing bullish signs. It's $15 away. Yeah, it's probably going to be above 100. So if I buy this $100 call for 2 years out, I don't really care if it's $1,100, $1,200. It's probably going to be at 2, 3, 4, 5 grand maybe. That cool? Does that help everybody? Yeah, it does. It does. The reason why I'm showing this, Ben, right, and what Ben's talking about is a leap option, right, over a year, right, 12 plus months qualifies for long-term capital gains rates. So I'm not going to get into taxes per se, but if I do, it's March, just round it up to April. It's April 2025 right now. If I go into a leap option and I go out until April, let's just say January 2026, right? That's underneath 12 months is technically still a leap in my opinion, okay? Then that capital gains rate might be, or from my tax professional, and Ben is also a CPA as well, that is going to be a different rate based on your taxes because underneath that 12-month period. So talk to your tax professional, But when you have shorter expirations and you really want a true leap option, you might have to adjust where it might head. So if I've only got 6, 7 months, what if this turns back into a bear market and comes back to 80, things of that nature? I might have to prepare to maybe look at a 90, maybe look at a 95, because it could come lower back into this bottom end of the range, which is right here, which is where I have around 60. Well, why did you say that? Because I want you to look what happened right here. You see when it bottomed out at 60, went all the way up to 87, and then got knocked back down into 60 again. And then it went higher. So I'm using historical data looking left that this can push up all the way up into here. But we don't know that yet. There's still some resistances that knocked it back down at 96, back down to 78. And then it could form another bear flag and come lower one more time and then take off. So if you got only 6 months on your contract, right, and you enter here, you better be prepared to enter lower as well. Do you see how leaps, they seem easier, like swing trading seems easier, but on these higher time frames, the volatility can be, man, I'm up on my leap. Imagine if someone got in a leap right here at 58, goes to 88 and comes all the way back down to 62. And they're like, oh my gosh, like I know I have 8 months, 9 months, 10 months on this contract for options, but that swing trade leap, you've got to be super patient and monitor it each day. All right. Or just put 2 years on it and say, screw capital gains tax. I'll just pay the taxes. I'll make more money in the meantime. All right. So I'm very particular on my entries on leaps. And I typically have 2 entries unless I get a really bottom tick entry, maybe like what Lyft was. I'm like, that's low enough. I think that's the bottom. Right. But if you got something like Dollar General that's already moving off of this first level, is that the bottom? I don't know, but it's a good entry. Cool. Let's talk about some others. So we got Dollar General, we've got Lyft, and I'm going to speed through some of these others. I'm not going to give education. I think you got it from here, but just give you the idea. Here's PayPal. And there's been a lot of speculation around the payment processing systems. Like, I don't like PayPal. I'm not here to debate with anybody. I'm here to show you that the charts tell a story. Okay. You might have to do your own due diligence on some of these. I'm giving you what charts look really good for buy zones, shares, leaps. Okay. PayPal has kind of broken out here. It actually had a good earnings. Okay. Their guidance was just a little bit shaky. Okay. So they have been moving in 2024 from this $60 level. They went up to almost 100. Okay. So they damn near doubled almost, roughly 60 to 70% off the lows. Now, what has PayPal done? It's formed a higher low on the pullback. Okay. So I'm very interested in what this hammer monthly candle looks like right here. That could be a signal for PayPal to take a short-term burst right back to the high 90s and potentially be ready to run back into 100 plus. Okay. Now it's taken a while for PayPal to do that because it's been on this downtrend. But as you see, the trend has technically changed out of this downtrend. Okay. Remember what I was saying earlier? The first breakout is just a sign. There's a downtrend. Oh, breakout. Consolidation. Oh, big breakout. Okay, pullback. All right, this is 1, 2, 3. Now 4 times PayPal has been holding roughly a higher low. Okay. And I look left and see what it's done at $68 to $70 each time. Does this mean it's going to go back to 200, 300, whatnot? I'm not worried about that. If it happens, cool. I take things from level to level, from 70 to 100. That's $30 move, right? So from 70 to this moving average here, right there, 75, that's a decent move on a day trade. Okay. So this is what a decent swing trade potentially opportunity looks like, is that on a daily, it's headed back to 75, gets back above 75, going to probably squeeze up into 80, above 80. It's moving in $5 increments on PayPal. PayPal is very inexpensive for their options as well. If you want to own PayPal shares, I don't think it's a bad idea at 60 to 70 bucks. But this is, again, another mixed. Do you own shares? Do you do a leap option? Do you do a swing trade? Do you do both? You can do all of them. So if I go out to January 2026, let's start in the short term first, and I spend $600 potentially on an 80 call right now. We just charted it, right? Probably heading to 80 within 6 months. Okay. So for those that still don't understand, you can pick that contract and still take the trade out next month. You don't have to wait till the end of the year. So for leaps or big swing trades, I typically like to grab a minimum 2 contracts. Because what if, man, I got the bottom and it pushes all the way back up into here, and you're like, okay. I'm up like 100+%. I know it expires 6 months from now, but let me go ahead and take one out. So you lock in profits, and now you're potentially just risk off. Now you can keep the second contract at break even, just in case it pulls back. Cool. So PayPal at a decent buy area between $66 and $70. You can see here, nice interaction there, previous highs into a support, and it's starting to break out of this level and headed to roughly 75. That is your short-term target for PayPal right there. So let's look at 70. So I really wanted to hold up 70 and then maybe break above this 72 to really confirm it. But yeah, break above that 72, headed to 75. And that would kind of give me a little bit more confidence in it if it starts to do something like that. Okay. Is that one good as well? Can I get a 5 in the chat? Does everyone see that at least? Yep. PayPal at sub 60. Yep. I agree. So this could be a little short-term swing, maybe a little trade, maybe into like April 17th, maybe June 20th. Those are some short-term swing options that I was looking at. How much interest was on these June 20th contracts into 90? I think that's a little bit far out, but it could. We just charted it out back to 90. But those 80s into June, not bad there. All right, so roughly underneath 200 bucks. If y'all remember that NVIDIA swing trade, if you took inside the community, that was a really good one. It was right around the same contract price, and it went to 400 or 500 bucks. All right, so this is another one that could move if you want to go further into the money and maybe buy one contract at 75 for 2 months out. I like that date of June 20th for this PayPal trade. Okay, so I agree with Ben as well. PayPal, it could go lower back into, sub 60, back down into here, right? What if I erased all this? Because it's still in a downtrend, right? What if it pushes back up into here like that? And then, like Ben was talking about, it gets knocked right back down, right? So shares, that's what you kind of talk about as, where's the bottom end range? And then also, where am I trying to take it to in the short term? All right, so we'll talk about it more. I think I already posted it inside of the shares and leaps channel. inside the community. So I'll keep updated on that one, but I think it's a decent short term swing opportunity for a reversal on their earnings. All right, with a gap above. Okay. All right. Let's look at a couple others. I was taking a look at Upstart. This is in Kathy Wood's portfolio, her ARK Invest. I know, whatever people's opinions are of her, but it's at a decent buy level here at 45 to 50, with a target back at roughly about 70 to 85. All right, so just kind of paying attention to where the area is. So that one could be interesting there. Hims, got my eye cleanly on this. I'd like it a little bit lower again to re-enter and add more shares. I think Hims can come lower, but it's at an interesting buy zone right now because it went up to 72. It's pretty much 50% off from the highs. So keep Hims on watch. That this $25 level is kind of holding up as this trend line right there, as you can see. So stair stepping its way, pull majorly back, and it's holding above 35. If it can hold above 35, I think we can get some retracement back up. So I like Hims in the $20 range, ideally, but I think it's 50% off from the highs. I think you can pick up some. Do I think it's a good swing trade leap opportunity from here? Maybe, depending on how it reacts right around in here, because I just do not want to turn this into a bear flag and come lower. So you probably wait on that one. It's not an extreme low, depending on what the market does, but I like it for shares down here. Stripe or Block, XYZ, Square. God dang. I mean, not Stripe, but Square, XYZ, Block, same thing. They just keep changing their ticker. Kind of the same thing as PayPal. Kind of this inverse head and shoulders consolidation, pull back majorly here. I know Bing, you're probably looking at this as well. I know James has been frustrated with with Square for a while. He's been holding shares for a minute, but Square, I think Square, in my opinion, or Block is a little bit ahead of PayPal just because of the crypto wave and your ability to buy Bitcoin and things of that nature off of Cash App. Right. So this is a buy area right here around 55 to 60. I think it's a good entry, decent entry for shares. Leaps always give 2 ads. So this one could be decent. June. Hopefully you are appreciating some of these that you just put in your watch list or take notes on just to kind of do your own due diligence. But people are always asking what's on discount. So their leaps are pretty pricey in my opinion. Like it's been consolidating too long since like 2022. I don't. It's ready for a big move, kind of like what it did here. Do you see it consolidated for 2018 through the tariffs, 2019, and then 2020 into the next Bitcoin halving, ironically. So does this consolidate all the way up into the next Bitcoin halving? I don't know, which will be in 2028. Very interesting. So maybe it starts moving into 2026 and 2027. But yeah, keep Square or Block on watch. Let's see. Roku starting to make a little move here. Roku starting to make a little bit of a move off of this level. You see Roku big in 2020. Very similar movement in action. Like I said before, this 2018 tariffs consolidated. They were probably not profitable at that time. And then here comes 2020. Everybody goes inside. It looks almost identical. Like what is coming? What is coming? Almost identical. These stocks that got absolutely beat down or absolutely skyrocketed during the 2020, 2021 wave. Like they're kind of starting to pick back up. If we look at Zoom, same thing. So I'm very intrigued about these stocks that got beaten down during that 2020 wave or after it. You see that bullish move off of there? That's pretty big. Like from 64 in 1 week, roughly 65 to almost 80. All right, that is very intriguing in my opinion. So it is broken out, got some bullish momentum. I'm not sure if it's real. Pop back down maybe, and we'll see what it does there. But I've got it on watch, and it's kind of got a hammer candle on a monthly. You see that candle that's starting to finish off the month of March? I need to see how that month finishes, but that's very interesting because if it breaks back above 100 and gets back above this kind of interesting area 105, that could just absolutely take off out of nowhere. And I don't know what news is going to come in or what they're going to say, but let's keep out a watch out on Roku as well. It's like Netflix's little brother, little sister. We know what Netflix has done, so really want to keep an eye out on that. Anyone else got any other things? Like any others that they've been watching? Hood? Okay. I think Hood can come lower. I'll give you some buy zones for it because I know people have been like, dang, I missed this down at, we caught it down at roughly like $12 to $16. I think James got it underneath like 10, something like that. And then once I saw my confirmation, which was a break above this high here, which was around 14 bucks right there. Okay. Perfect example here of why not to chase. Do you see this push? The first push when Robinhood got profitable and when it started to kind of come out on the scene and people started to, you know, they got the credit card, they got the debit card, they now have you buy crypto, you can exchange it. Now they have the desktop platform. Do you see this big bullish breakout? And then do you see the pullback right to 14? There's a perfect example of if you that breakout happens, wait for the first pullback and get your entry next time. Same thing here. So is this the bottom, 35? I think we can come lower and retest back down into roughly 30. Right? I know this is a big bullish sign here. I'll show you the reasoning why. Okay. We got some more gaps down below. So this might be this first little push back up into maybe 50. Do I think this is a buy zone? I thought 35 was good. I thought 35 was good, but need to see how it reacts, Dreama. But if you're looking to ask like for shares or is this a good opportunity, you know, to take it back up, I would think personally it's more looking like a bear flag to me. Do you see how it's come underneath this moving average here, pushing back up into it? And that's right into those previous lows that we talked about in that boot camp, right? Former support now becomes resistance. See that? So as it's pushing up, who knows what could happen and it could pull all the way back down. So that's why I'm waiting on Robinhood to get it lower underneath $30 personally, right? And maybe look for that bigger pullback on it. Cool. There's your sentiment on Robinhood. So top end of the range is trying to get back to that $48, $50 mark. And then there's a little bit of resistance that could step in right here, which is right around that 44 that we were talking about on Friday. So I kind of want to watch that zone, but it's kind of broken above it. So I just want to watch how it reacts there. So we were watching this. I was watching it all Friday to see what this reaction did. If it broke underneath this level, it could start pulling back. That's a big bear flag right there. So that tells me that Robinhood, I want to wait for lower on shares again. Right now, it's just kind of in a range of maybe to trade it and just see what it does. Cool. Awesome. Just checking the chat. Uh, Target. I'll mention it one more time. Again, for those that are rewatching it, haven't heard me say it before, I'm very well aware of the DEI situation. I'm very well aware that people have emotions in the market based on certain companies. You do not have to invest or buy certain companies. I'm just here to tell you that it is on extreme discount, and it may be even more. Okay. So it is at a buy level for sure, right around this $100 level, psychological level. Not sure how it's going to react here. It could react in the short term, very similar to what it did last time it hit 100. Look at what it did. It burst into the scenes, went into the summertime. You know, folks, I don't care what kind of consumer problems we have. Folks are going to shop at Target during the summer. They're going to get their swim trunks. They're going to get their stuff. They're going to get their pool gear. They're going to get the back to school stuff. I don't care what you're talking about. Okay. So Target will recover. It's just where the bottom is. Okay. So these consumers going into a summer spending time when folks say they don't got no money to invest in themselves will spend for summer vacations, pool gear, kids, and the kids are out of school. So guess where the kids want to go? Some of these kids want to go to Target. Okay. So that's how I think when I'm looking at take my emotions out of it. You can not shop at Target and still make money off the company in spite of, depending on whatever your emotions are. Okay. It's in a buy zone at $100. It's oversold on an RSI, on a weekly, on a daily. Okay. So what does that mean, Brian? What do we do here? There's a couple of things. This is one of those where it could just go at any point. I mean, it's just super oversold in the short term. I mean, last time it got here, which was right before the election, it kind of gapped up a little bit and started trending back up into roughly around 142 from 118. Okay. So maybe a $20 move from here back to 122. And it has to maybe have some positive news, which they typically do, right? They drive the stock price down, get everybody in fear, DEI, whatever. And then they just dismiss it, just like they did with the LBGTQ plus community, right? When they made that mistake, it gapped down and then it recovered. Same type of situation. Stock market psychology. Okay. They will get everyone to panic sell and they will make stupid money off the stock. All right. So keep an eye on this. I'd like it to break back above 115. That is the next target for Target. Would be 115 to break back above. That's that previous high there. But it is in a buy zone. I think this is in short term, like swing territory. If you'd want to enter this week and trade it back up, give it a couple of months. I think it's in a decent territory. You might have to be patient. This is one of those Merck situations that I called out last time. Right? I was like, enter. Doesn't that look almost identical? Back at 80 on Merck, enter, push back up in the short term, roughly around 15, 20 bucks. So Target, same type of deal into the summer months, some options contracts into June. Could look at, they're not that pricey, to be honest with you. If you want to give it even more time, maybe into August, September timeframe, could look at like the 120s, 125s, 130s. These are those that maybe you don't want to trade every day. You want to put it in a long-term portfolio and just watch the short-term swing play out. Take it out whenever it's profitable and just go from there. Kind of like some of y'all did with the NVIDIA trade that we took. All right. Decent amount there if you wanted to give it until September and get through the summer maybe. That's underneath $300 to go back to 130 roughly. That takes it through a couple of earnings, things of that nature. So 130, not that far off. And then entering at 100, it'll be profitable at 120, 115, 110. So there's one for you. June, I'd probably move it a little bit closer here because they probably have earnings. That's probably why they're a little bit more pricey. So maybe 115s, maximum 120s on those. for June. If someone wants to like day trade it this, maybe for the next week or so, I'd probably just stick with 105s, 110s. But they may not, they may move a little bit, but these are one of those that I'm just like, just give it some time. Okay. All right. We're at the top of the hour, roughly. It's been roughly about an hour and a half. I'm going to start wrapping this up. Any final questions for anybody? Beautiful share building. I'm liking Target. Yep. Yep. So a lot of things that into the summer where everyone should be able to make some money on some shares. If it's up, it's up. If it's some leap options, some swing options. If you're still not confident on how to enter these or where to enter, or you're still like a little bit hesitant, please tap in the community. I do update everybody on entries, exits, what the charts are doing. Hey, it looks good today, things of that nature. So shares, swing trades. Here's another one that's very interesting. TTD, the trade desk. Okay. I haven't really looked into their earnings, but look at this pullback. I'm like, it's a little concerning, but it pulled back into an extreme discounted area right here at $50. I'm like, yo, this is like super oversold. Okay. Trade desk on a weekly oversold at 22 on an RSI, oversold here. And it may be a slow mover. Again, I'm not sure if this full gap will fill immediately. Obviously, I've seen it before where something crazy happens and that was a fluke and it just goes right back to 100, right? But here's another one that's a kind of an opportunity here where it's consolidating and, for almost a week. The 14th dropped down and just back, forth, back, forth, back, forth. So these that you're maybe a little bit unfamiliar with, or you're like, I don't know about that. It's in a share buying opportunity at $50, right? But trade desk could be, if you're not comfortable with shares or you don't want to own it. Again, I think maybe going into leaps, a little bit pricey there, or a short-term swing maybe into September. I mean, these are those kind of like lotto swings, like maybe like going further out of the money. I start looking at like, what if this whole gap fills or something? Just go all, that's super oversold. Just go all the way up here to 90 and 80, things of that nature. So keep this one on watch. I think this one could be interesting. Back up into at least the moving averages. Yeah, at least $20 move off of here potentially. But I got to do some more research on what in the world actually happened. So just because something's oversold, just because something has dropped like this doesn't always mean it's a buy opportunity. Doesn't always mean it's, hey, just pick it up right here just because it's oversold. You have to do a little bit more research on what the company is. Are they a use case? Was it, cloud-based ad buying platform? If you've heard of Trade Desk before, platform allows clients to execute integrated campaigns across ad platforms. So it's in the AI space. It's also dealing with ads, online advertising. So just in general, based off of their sector that they're in, I think they'll recover at least a little bit. Might have to look at their financials a little bit to see what's going on. But other than that, got some call options over here that are starting to pick up a little bit at the 57.5s. So, all right. I'm looking at the chat. So going once, going twice. Any final questions from anybody? Any final questions? I can give the game all day, but execution is different. So if you try this, please be mindful. This is not financial advice. If you buy anything that was mentioned on here, not financial advice. These are shares that I am looking at and things that are oversold that I think are at good buying opportunities. Please make sure you have stop losses, you have your wrist tight. If you are busy, put time on the contracts. You may have to spend a little bit more. If you don't know what that means, you may need some mentorship. all those types of things. All right. Also, give me some feedback. All right, give me some feedback. We do answer our DMs, so if y'all are messaging me, just know I have some. What is it? I have VAs as well, so please be careful what you message me. All right. Y'all just think I'm over here just running a one man show. Crazy. All right. Going once, going twice. We good? I think we're good. All right, everybody. Peace, love, and blessings to you. I didn't share any big stocks. You're gonna have to be in the community this week. So I'll get a read on the market tomorrow, and we'll see what's going on. But make sure that you are tapped into the Leverage University Discord, and we will share our apples, our Nvidias, because y'all didn't mention it. You didn't let me know. So I will share our major tech stocks and what they're doing.